That this is the price that we gave out in the tweets. This price here, this blue line here, is the tweet we gave out on the 6E contract. I know it's not the 6E we're looking at, it's a dollar, but it's the same price level, relative value price level. So we already know that this is going to be a big place because we'd already seen dealer buying the euro at that price. So we know there's going to be a good opportunity to sell some dollars when the twos fives is so divergent against that high. Great trade to the downside, no developing value when we made new swing lows, of course, no developing value, so it was obviously a walk away at that stage. Pretty good trade, right? So when it comes back up, of course, we're obviously going to be looking to sell back into it, but the value was too strong, so there's no sell for me. So the trade was very, very clear. They were going to try and run the price back down to sweep the stops at the bottom edge. With the value bullish, that would make sense. Now, it wasn't just a manipulation to the downside. The pension fund suggested that they would take the price down as well. If you take a look at your PFs, you will see that. There's the PFs themselves coming in here. And you can see that the PFs are pressing the price down into the bracket lows here. So there was no reason to step in too soon. And that allowed us to just sit and buy dollars at these lower prints on 3 occasions. And on 3 occasions, we've had very easy profits off the low print. So that's been a good trade, hasn't it? That's been a really good trade. You might be saying, well, how much more has it got in it? Has it got anything more in it? Has it got any more evidence of an upside potential? Of course, that's one of the big questions. And when we look at things like the back end of the curve and the front end of the curve, these are the questions we're always trying to answer. If I look at the ZF, ZN, for example, and we can see whether it's agreeing, we can see that the 2s 5s is perhaps a little bit too overly priced, but on a macro scale basis, it still looks as if it's got a reasonable discount to the curve. So there's definitely still something in this, isn't there? There's definitely still something in this bit of business that suggests that we're probably okay for the time being. Looking at the relationship of the A's and the J's, of course, gives us another couple of ideas. The A's should be confirmed by the 2s 5s, one would imagine, at least on the carry trade basis, and they are confirmed by that. But as the 2s 5 starts getting perkier, of course that starts limiting commodity upside, and that commodity upside will start leaning on the Canadian and the Australian dollar at higher prices. And I think we can already see the Canadian and the Canadian dollar starting to become a little bit exposed at those higher prints with those higher 2s 5s curve. So yeah, it's been a good morning. Probably one of the easier trades for us this morning was the sell on bonds. That was pretty simple, straightforward trade as well. At the London Open, right on the dot, literally right on the dot at the London Open, we saw let's take the J's off for a second. We saw the baseline case for inflation very, very visibly bearish. This is the inflation break-evens, of course, so we can already recognize that at the London Open, inflation break-evens opening gap down, which is obviously exactly what we're hoping to see. Very, very strong storyline based around the euro developing story in the background, of course. And that opens the door for us to start. Now, we've also got a wholesale price, 161 evens. Brilliant. Wholesale price of 161 evens. Inflation break-evens gapping down. 8 o'clock in the morning now shown on the screens. If you don't sell that, guys, you are missing an opportunity. So we sold it. Took a nice trade off the top line. Took it down to the bottom. Got a great pullback, didn't expect to see it, but we got a great pullback to the 161s again. Sold back into 161s, good profit press to the downside, started to jam into the lows, no further progress into the low price here. Got a pullback, I thought that was good enough to sell back in. Took a sell, again back into the low prices again. No progress at all from the inflation breaks, and just jamming back into the bottom edges again here. Thought there was little point in trying to sell more into this, pretty dreadful. And since then it's pulled back again, and on the basis of these kind of failed auctions, I want to try and sell at higher prices. I don't want to sell at lower prices. So I do want to try and make sure that if I'm going to sell it, I'm going to sell it at that price there. And if I don't get filled, I'm not chasing this just now, because this is not bearish. Not bullish, but it's not bearish, and the price is at a top of a bracket. So I could still get away with a sell, but I don't think if I could get away with a sell if I sell on a downtick. And that's what I'm obviously very cautious of just now, is making sure that I don't sell across a spread at all at any stage. In terms of data, where are we at? Perhaps you've already got a couple of looks at the data this morning. There's not very much to report on. It's not going to take you an awful long time, but Swiss trade balance came in slightly better than expected. That was the highlight, and that's the highlight, guys, my goodness. In terms of US data this afternoon, quite a couple of interesting numbers actually at 1:30. We've got Philly Fed expected to be better than expected. Unemployment claims expected to be better than prior as well. 260,000, 267,000 prior. Not by much, but still better than expected. And this is in the background of the US numbers that we've been seeing coming through as well. This idea of, are we starting to see better than expected numbers? Remember the retail sales numbers from from Tuesday. We got the retail sales numbers that came in. They were a lot better than expected. The US industrial production numbers came in. They were a lot better than expected. The capacity utilization going up better than expected. So we started to see some US positives for a change. And obviously the idea there is that, if those positives keep going, then that should help us with a bid on the dollar and, the bid on the dollar, and whether we get that this afternoon or not, we're obviously going to be watching. But as I said, they're not brilliant numbers, but they're still important. They are all forecast to be better than expected, the Philly Fed and the unemployment claims. So that's why I'm a seller of euros at top edges. It makes sense for a price discounting to be short the euro. So that's why I've been taking it. The only downside for us is the dealers are going against that trade. The dealers actually bought some euros at 45s, pushed the price back up to the top edge. We couldn't find any sellers at the top edge, any buyers on the euro, any sellers on the dollar at the bottom edge, any buyers at the euro at the top edge. Couldn't find them. So for that reason, we ended up stuck inside this pesky bracket that we've got at the top prints. Anyway, welcome in, guys. I hope you're all good. So as I said, 1:30 numbers scheduled, so be careful. If you're not in a trade, don't start banging on the buttons until you get the numbers out of the way. And we'll pick up the slack once these numbers are out the way. So I'm going to grab a little bit of lunch, put a couple of horse bets on, and see if we win some money this afternoon.